Here on the Transparent FX Academy, every day I share my educational market breakdowns, showing you how you can be looking to analyze the market both from a technical and in order flow perspective to identify the best trading opportunities in the market. So without further ado, let's jump straight to the charts and see where we can be looking for the next potential opportunity. In today's video, I want to speak about EURNZD. Now, why do I want to speak about EURNZD? Because at the moment, we do have quite interesting price action and structure. So what I will be doing is providing a complete multi-time frame top-down analysis, starting from the higher time frames, going down on the lower ones. We will also check what we have from a COT perspective. So commitment of traders, which is basically what hedge funds and the non-commercials in the market are doing. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on the pair. Now, starting from the monthly time frame, we can see how the market has just provided a nice move to the upside here. Now, in this move, there is one candle which is not related to the move, which is exactly this red candle here. Now, when you have a move to the upside and there is one candle not related to that move, that is a strong structure level. And in this case, since the market is approaching it from above, it is strong support and demand. And we can expect the market to at least provide a short-term rejection to the upside away from this level. So on the monthly, everything is quite clear. Going down on the weekly time frame, what do we have? Now here on the weekly, we can see that at the moment, also here we are testing strong support and demand. From here, the market started all this move to the upside, again here, tested and rejected, and here the market just tested once again this exact same weekly demand and support level, and we definitely can expect the market to get rejected to the upside. So also here in the weekly, everything seems quite bullish and we can expect a rejection to the upside. Just a quick thing, make sure that you like, subscribe, and also let me know in the comments the topic for the next video. Going down on the daily time frame, what do we see? Now here on the daily, we can see how the market has just provided this overextended M formation. Now in general, after the creation of an overextended M formation, you want to see the market provide a correction at least to the 0.32 of the Fibonacci taken on the impulse leg. So obviously from the high to the low. Now in this case, the high is here and the low is here. So if we have to take our Fibonacci from the high to the low, we have to take it like this, which at the moment indicates that the 0.382, so basically our first upside target, is exactly here, which is this previous support turned resistance. So we can expect the market here to provide a correction at least to this level before then providing a continuation to the downside. Now, if we go and see what we have from a COT perspective, so commitment of traders, so what the non-commercials are doing in the market, we can see how lately on the euro, hedge funds were definitely adding thousands of short positions, making the net positions decrease from 118k to 38k. However, with the last report, they have closed for the first time shorts, which indicates that they're not really interested in the continuation just yet, meaning that a short-term correction is definitely possible, at least for the completion of the pattern as we have just said. And if we go and see what we have on the NZD, we can see how we just shifted from having a positive net positioning of 3.1k, actually 3.2k here, to having a negative net positioning. So basically going from having more longs than shorts to having more shorts than longs from an institutional perspective on it, which obviously makes it weaker, which means that EURNZD could definitely provide this move to the upside to retrace to the 0.32 of the Fibonacci taken on this daily impulse, completing the M pattern. So there is basically a short-term longing opportunity here. So how we will be approaching that with students? Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily, those are the best time frames from a directional perspective combined with the COT data. But when it comes to confirmations and entries, the best time frames are the 4-hour and the other intraday time frames. So with students, we will be monitoring price action from a 4-hour perspective and lower during this move to the downside. And we will be waiting for the market to shift from an intraday bearish market as we have right now to an intraday bullish market. And only if the market will shift from an intraday bearish to an intraday bullish market, only at that point we will be adding EURNZD to our watch list, and as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to retrace at least to the 0.382 of the Fibonacci taken on this daily impulse. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then you trade them with me every day. I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits. And you also can ask me questions every single day and get the answer the same day in the Q&A session. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in my next video.